We are live at the TulipDAO. I am trading tulips, and we are here with the team from ImpDAO. They have put together Olympus fork on Fantom chain, and they are doing some unique things with their treasury management and with the execution of a lot of the technicals. So we're interested to hear what they say and what they have to bring to the table when it comes to the reserve currency space, because there hasn't been a lot of success in the space that we have seen. So we're very interested to see what they can do because they have some big brains behind the project. We have been watching them since launch. We've known them for a while, and we've been watching them, and they're a trustworthy team, and we're very excited to see if something can change here. So welcome, guys. I'd like to start off with you guys just explaining a little bit about yourselves, and possibly, if you could, about your team, and what made you go with the OM model, and how do you plan on shaking the space up?
Yeah, sure. Happy to kick things off, and thank you for having us. I'm Joe Man, and I've got my co-founder Bossim with me as well. So maybe first around ImpDAO. So as you said, we are an OHM fork. We are operating primarily as a decentralized and at the moment diversified DeFi investment fund. So the idea behind our fork was not to establish a new reserve currency, but to use the mechanics and the technology behind Olympus as an opportunity to raise a fund in the crypto space and to deploy this fund or treasury, however you want to call it, effectively to generate returns for our stakeholders. So what brought us to the idea is both that Bossim and I have been actively trading in the crypto space for the better part of 1.5 to 2 years. Bossim a little bit longer than me. And we both also have a heavy background in traditional finance. So Bossim has previously spent time on sort of interest rate derivatives, fintech space, and general sort of option pricing and that sort of shenanigans. And I've been following the sort of traditional TradFi path around good master's, finance degree, and now have been working for a couple of years at a larger investment bank in tech coverage. And sort of we try to apply this know-how we've got from our TradFi jobs and out of the experience we got from trading actively in the crypto space into a managed product where people could invest in and could sort of have an opportunity to get DeFi exposure without changing their portfolio allocation every day. Because as much as we all here in the space value places like ImpDAO and TulipDAO and all the other sort of chats and discords where you can exchange trade ideas, most of the protocols and products we see in the space unfortunately are very short term, although quite lucrative if you play them right. But you still need to adjust your portfolio a couple times a week, most of the days. And we wanted to give people who are exposed to the space an opportunity to invest somewhere with a set it and forget it mindset, right? So we've started out as a DeFi fund, which primarily at the moment is invested in the Fantom ecosystem, as well as some stuff on Arbitrum and other chains as well, but with a DeFi focus, so we don't dabble really in NFTs or any adjacent sectors. We've had, since our launch in mid-February, a performance of, I think, around 30%, right? When the current sort of rest of the crypto space has deteriorated quite a bit from sort of the highs we have seen at Fantom, I think was trading around $2 back in the day. So I think we are off to a good start, but it's obviously still a very niche product, and we are working around the clock to bring new products and innovations to the space and to our protocol.
Great overview. Yeah, sounds great, man. That's some pretty impressive performance for the last few months for the treasury.
I mean, we're actually underplaying it a bit because there's a new trade which is about to materialize, which will probably boost the treasury by another 15 to 20%, depending on sort of the final exit. But we can't talk so much in detail around this yet because it's still depending on
25%.
Yeah, exactly. 25% increased performance on top of our current 30. But we're still sort of can't give too much detail around this trade because it's still depending on another vote which is going on in another protocol. So to avoid us sort of suffering because the vote then in the end goes the other way, we're going to refrain from sort of covering this in more detail unless, Bossum, you disagree. But yeah, exciting stuff. I think once the market will sort of continue to improve, right? I think ImpDAO is well positioned to benefit on this improved macro climate. Because at the moment, I mean, there's only so much you can do in terms of opportunities in the space right now to generate yield. Obviously, we are both working around the clock on this, but it's still challenging. But I think the 30% speak for themselves in this environment.
Yeah, no doubt. Bossip, do you want to add anything, or would you like to introduce yourself?
Yeah. Sorry, I'm not talking that much because I'm a bit sick, so I'm keeping talking to the minimal. So I've worked a few years in IB, in interest rate derivatives, then fintech on options. I've been trading full time on cryptos for like 6 months. I quit my job, but I've been trading for longer than that. Just quit 6 months ago, and I wanted, like, the idea behind ImpDAO was to, like Yoman said, to offer a platform to those who want us to invest for them. In a diversified strategy at first, but later on we'll explore more specialized strategies, notably around options, etc. So we plan to bring a product for every DeFi investor, whether he wants us to manage his whole portfolio or kind of define exposure. For example, it can be shitcoins, it can be options, it can be blue chips, it can be yield farming, etc. So what's good with blockchain tech is there is low barrier to innovate and to offer those type of products. So we are going to leverage on our financial expertise and on our technical help to deliver those products.
Yeah, I think that's an important point you make, actually, Bossum, around sort of what's lying behind phase one, right? Because right now in our current phase, we're focusing on establishing our track record, building the structure we need to launch essentially the different pods and the different strategies Bossum already teased. Because in the long run, how we envisage MDAO is not to run as a single fund, but more to act as sort of a BlackRock style wealth manager in the space where you get the opportunity and the option to invest in the baskets of strategies you feel most comfortable with, or you maybe also lack the expertise to do yourself, right? So that's why also the first strategy pod we'll launch is options, right? So if you guys have been following our Discord a bit, we are already doing quite well on ETH options the last sort of couple weeks. Made some good progress there, as well as sort of the Dopex ecosystem, which we use to gain exposure there. And there will be more interesting stuff in this and more specific stuff in this down the road. Because obviously with options, what matters most is correct pricing, and that's something where we see a lot of opportunity because even the established protocols like Dopex, for example, still have problems actively and effectively pricing volatility, because most of them rely on sort of realized and sort of historical volatility. And obviously that's the wrong way to think about option pricing if you really want to go into the math, which we won't do here, but there are a couple sort of tools you need to build first in order to be able to really gain an edge there, which we are currently doing. And then there's obviously also the community aspect of things, right? So in the long run, this is way too big of a project for only us two idiots upstage here to run, although we sort of have a certain pedigree and experience with the DeFi sector already, but it matters that we build this in a decentralized way in the long run, right? And what this means is that people with expertise around specific strategies, right? For example, options or stable coins like data neutral.
Let me interrupt you real quick.
No, go for it.
Let's bring it back. If you could, let's kind of see where are we now, and
Yeah.
and what are the next few things that are going to be coming for you. So you've launched. You guys have started to establish your treasury. You've approved some strategies through your community, right?
Yep.
And everything that you do is being voted on, or is there some portion of the assets that you guys are just managing and they trust you with?
Yeah, so at the moment, everything is managed by us. So there aren't specific shareholder votes or stakeholder votes going on, because most of the day we do a couple trades each day, and doing a snapshot vote for most of them would defeat all profit in them, right? Because you need to scale in and out of positions quite easily, and quite quickly. And also down the road, the idea shouldn't be that the stakeholders vote on individual positions we take, because then everybody would just front run the vote, right? And that brings an inherent problem to the investment returns.
Very possible, yeah, I agree. And
Exactly.
And
this is something that I've debated or discussed and thought about heavily, because I've been in a similar situation, right? Because I mean, it was a very similar thing.
Yeah.
So I understand the struggle. It's a balance of transparency and effectiveness. It's because you can't be real efficient if everybody's front running the treasury. But when it comes to farm strats and scaling into stuff over time, like, do we want to take a position farming something for 2%, or do we want to take a trade on something? So things like that I think could be like, as far as like treasury breakdown, like leave it to the community to decide what percentage is going to be spent doing this and doing this and doing that. Those are types of things that you could leave to them if you wanted to incorporate. I mean, if everybody's happy, it doesn't matter. But you know what I'm saying. There's always going to be something. What are you guys buying? What are you investing in? There's always those guys.
Yeah. I think, Bossam, you wanted to say something, but then maybe
Yeah, I mean, we need an agile environment for investing. So putting up votes, sometimes you have to take the opportunity when it presents itself, but we need to have some power to the community. So, for example, you could imagine in the future, the investment council would be elected by the community, and you could have shares that would be up for votes every given period of time. You could have the community set the risk limits, like you told, between the allocation, etc. So we want to transfer some power to the community, but it will be like an indirect power. And we want on the investment council people with financial expertise and different opinions and different styles. So there is, you need a diversified assembly to have the best ideas come out of it. You challenge each other ideas. So as we grow, we will put more that kind of structure in mind. We have in mind for when we grow. But for now, we're managing the money of our investors, and I think they're pretty happy with the returns, especially with the deal that is coming out, and it's actually will improve our returns by a lot, and hopefully it comes down before the market goes up, so we can take some more positions and ride the market up.
Yeah, for sure.
Exactly. I think what it comes down to in the end is that the individual investment decisions will always be at the discretion of the sort of people in charge to an extent, but the people in charge will be put in charge by the community, almost like a indirect democracy, right? Which in the end, we understand that decentralization is understood in a different sense by different people, but we feel that for us as a protocol, returns and increasing the backing of each token should always come ahead of potentially engaging in a decentralization experiment like Concave or other sort of similar adjacent DAOs and OHM forks are doing.
Right. Yeah, I would agree. It's a tough thing, and I think as long as, like I said, as long as the community is okay and they trust you, and this is, that's what's important. Transparency and communication with the community is very important. You guys have I have not been to the site in a couple weeks. Is there a dashboard for the treasury?
Yes, I mean that was the main sort of feedback point we got initially, because obviously people who were with us since the start. So I think we had the Discord open for half a year. They sort of gained comfort around ourselves and our ability to invest. And we obviously also completed a doxing and KYC with a credible third party, being Assure. And the other thing, which still was sort of quite opaque for new joiners, was what we are currently holding in our wallets, why sort of we are taking certain positions. And I think sort of the first one, sort of what's in our asset portfolio right now, you can see it. You can go to ImpDAO.finance.
I'm on it. Yeah, I got it.
Go to the dashboard and get a direct overview. And happy to sort of, if you see a couple things, pick them out and discuss them in detail. If you see something interesting and something we should pick up. Otherwise, I think this is sort of the main point to get comfort around our investment structure, and then sort of on the why and how we do it. I think our Discord is still the best address, where I think Bosim spends most of his days, and I spend most of my time when I'm not sort of working my TradFi job. But yeah, that's sort of the two places I would definitely recommend there.
Yeah. This is really nice dashboard. Go ahead, Bob. Yeah.
About our investment style in general, just when you see the dashboard, like we have most of our position are between 5 and 10% of our treasury. We try to take many bets at the same time to reduce the overall volatility of our returns, to diversify risk, etc. We will size sometimes bigger if we see a better risk return or if we are more bullish, and we will try to always go for the best risk reward on the market and to have different styles. Sometimes it's degen short term, it's sometimes it's long term, and to try to have some target weights that will move and adapt to market conditions. So for example, for a while we had quite bag of stables, and now we are offloading it partially by either longing the market or just buying back our token, because like we said, we have some money that is flowing in, and currently we are below backing, so we are front running a bit the news to up that net asset value or backing to our holders.
Right. Let me ask, are you guys planning to use the treasury to support price levels at before $1 like these other clowns?
It's a good question. And for us, how we think about it is similar to sort of a publicly traded company, right? Which would issue shares when they feel that they are relatively overvalued, right? To get funds to continue building their business and so on. And they would also conduct buybacks whenever they feel that their token might be undervalued. And I think for us, it's great because, as Bosim said, we have the backing value, or as you would call it from finance, the net asset value. And whenever our token dips below that, we are obviously actively thinking about it. But as we've also said in a couple sort of previous AMAs, it's important to not tie this to specific price levels or guides, because then it would be manipulated and exploitable by third parties, and that's something we obviously want to circumvent. But yes, we will actively support the price because we know that there's more money in the treasury, right? And it's about increasing backing value, which will benefit every holder in the end.
We don't support the price just to support the price. Like sometimes you have to think of your treasury like, would we rather be more long imp or not? At current prices, is imp a good investment? Do we have other opportunities we want to pursue, etc.? Right now, we feel imp is undervalued, and the allocation, it's okay to use cash to buy imp because we're buying an allocation that we like, and we don't want to change it in a way. So makes sense to buy your token when it's low and to sell it when it's high, to play on your treasury like delta, how we say, like dependence, correlation to imp price. And I think a lot of OHM forks don't play well with that. That's why we saw the extreme movement.
Yeah, that's why you see such poor treasury management, is because they just, literally sell the token every day a certain amount.
Yeah.
And just, it's time to sell the daily fucking team allocation, dunk it on the market no matter what the price is. There's no control. At that point it's just just a train going straight into a wall, you know.
Yeah, and the chart looks like a rug as well. Then in these cases, unfortunately, yeah. No, I agree.
Yeah, I don't know what they think if they speed up the dilution. Maybe it'll be over sooner and the price can recover from the bottom and they can do stuff. Maybe, I don't know. But that, to me, it's so silly. Like, if you have millions of dollars in your treasury, millions of dollars in liquidity, there are things you can do to make sure the price is supported, you know? Like, period. I don't care who the fuck you are. Like, you have a brain and you know how the markets work. You can fix this shit for your investors, you know?
You're making an important point, and you know how you just said, you know how the market works. And I think it comes down to this, right? I mean, we've seen as the OHM meta sort of initially kicked off and everybody started forking it, a lot of people with significant development power forked OHM and started their protocol. But as it later turns out, you don't only need great developers, but you also need people who understand the implications of inflation, of monetary management, because to an extent you're managing your own currency, right? And to an extent you're also managing a fund which has to deploy its assets into return opportunities to generate yield for all of its holders. Otherwise, it's just exposed to inflation and exposed to just sitting around, right? And I think that's why we see a lot of redemptions right now with larger protocols. That's why we see a lot of OHM forks having issues with treasury deployment, because you have people in charge who might be great innovators in the space from a technological point of view, but who lack the TradFi and finance acumen to be able to deploy hundreds of thousands of dollars at scale into risk-adjusted and well due diligenced opportunities.
Yes. Big challenge for people. I mean, most people can't make money off $100, let alone 100,000. They're just gonna squander it and fuck it up, you know. And it's what we've seen it repeatedly. People just accepting bonds for random fucking shit coins, you know.
Yeah, I think it's also the fact that for a couple of these people, I think they haven't, to an extent, fully realized that they are managing suddenly 1 million, 2, 5, or 10, right, or 100 in some cases. And they're just a couple of developers who are now suddenly in charge of what TradFi would call a sort of mid-market fund, right? Where people with decade-long experience, lawyer teams, investment teams sit behind the wheel. And that's a completely different thing, also mentally for you as a sort of protocol owner, from a security point of view, from everything, right? And that's something I think people underestimated, and which has caused a strain in the industry to an extent.
Yeah, it's a very interesting thing because, you know, when somebody creates a pretty website that looks nice and trustworthy and very well made, and, you know, it seems like you're buying into a full-featured product that would have a fully developed team that knows what they're doing, right? But a lot of times, you just get the pretty picture, you know. When you go to the site, it looks great and it feels great, but that's all that it is it's just like a mask, you know.
Yeah.
And that has really been the problem with all of these protocols that we're seeing fail. Even the node projects. These guys have no fucking clue. They can copy paste the project and they could put together some community management and a website, but they have no concept of economics.
Yeah, exactly. I think what people mistake is that nodes and sort of Olympus technology and sort of similar protocol mechanics are all there to raise a treasury, right? To raise a fund, essentially. So it's cool that you have an innovative way to raise a fund, but you need to be able to invest it, right? And that's sort of maybe also circling back a bit to ImpDAO, is also why we have been trying to engage with external protocols as well, who are facing these issues right now, who are sort of struggling a bit, deploying their treasury into good opportunities, who might have issues around sort of their risk parameters, just sort of investing into low yielding assets and not sort of generating much value for protocol owner, for token holders. and we try to sort of advise them or offer them a way out in the form that ImpDAO would, for example, take over their treasury at backing. And I think we will see more and more of this sort of M&A activity almost in the space, as people will start to realize that it's less about raising the fund and raising the assets, but it's more about deploying it efficiently and at scale.
Yeah, no doubt. It's it's not an easy thing. Don't get me wrong.
Exactly.
It takes many years of experience to understand the true volatility and nature of the markets, man, especially crypto.
Yeah, and I mean it's a great space to innovate as well. Sort of what we have been looking at, two things we are like both cooking up right now is, for one, obviously the whole topic around option pricing, and then we are obviously also asking ourselves, hey, we are obviously strategically investing our fund and our treasury money into specific opportunities, one at a time, right? As Bosim already said. But there's also another question to ask around portfolio composition and sort of the overall allocation as we scale and as we grow into this multi-strategy fund, right? Which we elaborated initially. So we are also right now working a lot around what people from finance or TradFi would think is efficient market hypothesis and sort of efficient portfolio theory, where you look at how volatile each of the assets in your basket is and how interrelated and correlated returns of these assets are. And I think that's something which a lot of investors at the moment for their personal portfolios are not doing, but where a lot of value obviously lies, because as we know, crypto for the most part is quite correlated, and it's quite the matter of fact that if Bitcoin or if ETH goes up, Fantom goes up as well, right? But there are outliers, and being able to identify these opportunities and these tokens which trade in inverse or not in correlation to the rest of the market will be incredibly valuable for a fund itself, because then you're able to improve your returns by reducing the volatility of your fund, and thereby, because you are a low volatility fund in that sense, then you can deploy more of your cash reserves into the market and not sort of hedge with cash for an expected market downturn. And that's something which we are quite excited about as well, besides sort of rolling out the more actionable and more bigger things on our roadmap, obviously.
Yeah, no doubt. So, okay, cool. Now that we've kind of gone into the depths on treasury management and the reserve currency aspect, let's shift towards your guys' development plans. I don't know what you, I mean, I understand that it's similar to TulipDAO in the sense that people will come to you to invest when they don't want to have to think about shit, You're going to be providing a hands-off way for investors to get exposure to treasury moves or to treasury revenue. Now, what TulipDAO was going to do was create a trader's ecosystem, what we are planning to do still. This is coming still. It's been taking much longer than planned, but I still plan on building this and deploying it on multiple chains. But the goal was, co-vesting, shadow trading, full ecosystem with a social aspect to it and things. So what is your guys' idea for your product platform? I know you have some investment fund strategies or some things like that. If you could just touch on everything and maybe your roadmap going down the line a bit.
Yeah. So I think that the main difference between TulipDAO and ImpDAO is, as you already mentioned, right? I mean, TulipDAO will be set up as a platform, as a marketplace almost, where people can choose the trader they want to follow and follow that wallet in sort of a shadow trading manner, right? And for us as ImpDAO, we are also looking to provide yield and returns to our stakeholders, but we want to insource the trading experience and sort of the investment strategies into the fund to be able to apply the same institutional grade risk management and sort of compliance and execution management to each individual strategy we are running, because we feel that in the long run, this will enable us to build a complex sort of ecosystem of a multi-strategy fund, which we now see in a lot of avenues in traditional finance, where you have the opportunity with one wealth manager or fund manager to invest into different strategies at your discretion and at your allocation. Obviously, the biggest example for this and most accessible for most is BlackRock in the sense, right? With all their different passive ETFs. And I think down the road, how we want to arrive at that point is quite simple, in the form that right now it's all about track record establishment. It's about building the tools we need and the structure we need to launch our first pod. Because the way we want to launch these different strategy pods, right, which in TradFi would be the different ETFs or different funds people would invest in, is to launch a sub-DAO, another Olympus fork within the ImpDAO ecosystem, which initially will be primarily controlled by the ImpDAO protocol. And then as people will sort of start to actively want to only invest in this one sort of, for example, option pod, the spun off new sort of option pod DAO will start to spin out more and more out of the ImpDAO ecosystem, to the point that somewhere down the road, maybe people like to ape into options, right, and want to sort of have a fund for that, yeah, right, and maybe it grows to the point that it's actually larger than other funds in this ecosystem, right? Because what this strategy enables you to do is to start a fork of Olympus for each of the strategies you want to bring into your ecosystem, right? And then it's all under the ImpDAO umbrella in the end, because ImpDAO will obviously retain an exposure to this option pod in the long run, because obviously as a diversified fund, ImpDAO wants to get exposure to different strategies at a sort of risk-adjusted basis and sort of balancing this as a portfolio itself. And the other great feature is that around each of these new forks, around each of these pods, a new community can form, a new investment committee can be established, right? People can be there in charge who only do options, right? You can have a few quant guys over there. You can have people from Jones potentially, or from other sort of option niches in the space, who can there decide on the specific allocation and investments in the option pod, right? Because there, obviously, you have a specific mandate to only invest into a certain ecosystem of options, right? While it's the current ImpDAO mandate is very broad, in the sense that we are able to invest in multiple avenues, in different protocols, and so on. But each of these sub-pods will have a specific strategy, so investors also know specifically what they're getting into, right? And it will start with the option pod, which we are currently sort of building the tools to be able to start it, and sort of scouting for talent, because this won't be a two-man show in the end. And that will be sort of the first step towards this multi-strategy fund in the long run. Hope that sort of clears things up, but otherwise happy to sort of deep dive into more specific steps. But it comes down to establishing track record, building the right tools, right, and the structure you need, because obviously there are a lot of sort of complex things which go into establishing a fund, because otherwise everybody would do it in TradFi as well, right? You need to think about how you incentivize the investment committee, how you avoid people front running the fund with their own personal wallets, right? You need to have risk management in place to be able to track what the different investment councils down the road will be doing, right? And all of this obviously requires a bit of time, which we fortunately have, because in order for any investor to gain confidence in this structure and ecosystem, you need to have a track record of successful investments, because people invest in these ecosystems not because we offer a gamified way to crypto, but because they want to make returns and they want to feel secure about their money and about their returns and yield, right? That's why sort of things are progressing gradually around sort of an exponential slope in the end when it comes to asset under management.
Okay. So I'm a new user. This options thing launches.
Yeah.
What do I do?
So for you, as a user, by that time you're probably exposed to ImpDAO by holding Imp, right? So you first of all have the benefit of now having the opportunity to choose for yourself whether or not you like the exposure ImpDAO has to this option pot, right? Being sort of 20% of the portfolio. I'm just making up numbers right now, but being 20% of the portfolio, or if you for yourself say, hey, I'm actually kind of an options guy, and I think this space will boom, especially in the next sort of couple months. So I'm gonna sell some of my Imp and buy Imp option, right? Which will be the coin issued by the new DAO. So you can rebalance your portfolio a bit to be more overexposed to options compared to the main diversified fund, right? Because the main diversified fund is still there to minimize also volatility in an extent, right?
Okay, so this is interesting. So, like, you have another token.
Yeah, exactly.
So it's like option imp or whatever.
Yeah.
And purchases this with imp tokens.
Yeah, I mean, not only with imp tokens, there's a liquidity pool for both. You could obviously, I mean...
What happens...
Yeah, sorry?
Sorry, what... This could be a really big thing if you burned all of the imp. It would create massive sustainability for you guys.
The idea is not necessary to burn
all of it, though. Burning all.
It's not. Yeah, but it's not necessary to burn the imp. The idea is to have strategies out there for people to pick, and if they don't know what to pick, they will pick imp, basically. And we will just launch products, and imp will have some money there that is managed by those protocols, the new protocols, those pods. But we won't be burning imp for it.
You guys mind if I share an idea?
Yeah, sure, go for it. Let's discuss.
Because you might create over dilution here. You're creating inflated value. They're purchasing exposure to the same treasury. They're just getting more unless this is something. Where is the added value coming from for the options trading? It's coming from the treasury, right?
So not necessarily. So, for example, we could seed let's say we launch a new protocol, a new fund. We seed it with 100k from imp, and we say if the community wants to put funds, she can buy tokens at it can buy tokens at defined price, and imp will have the tokens of this new project as exposure to options, and we will do the option strategy in the sub project.
You can almost think about it in the sense that that ImpDAO is kind of the launch pad for a new Olympus fork, right? Which is raising funds from the imp community as well as sort of the imp treasury itself, and then does its own thing. But it's obviously defined in the parameters we as ImpDAO set to it, right? So it's more interrelated, but it still gives the opportunity for this new option pod to spin out further out of the ecosystem if they become bigger, if the community sort of more gravitates towards this, and there isn't sort of necessarily an outflow of liquidity from ImpDAO to this option pod. It's just people rebalancing their portfolio as they like and as they should, because that's ultimately the goal.
Right. But the liquidity has to come from somewhere.
Exactly.
So as long as you guys are aware of that, and it's new money and not money from the treasury, even if you seed it, you're destabilizing.
No, if you seed it, you obviously get the option imp in exchange, right? Which is then also attached to a value in your treasury. So
as long as those imp tokens need to get taken off the market, an exact value, to what you put in that fund needs to be taken off the market.
No, because we're using stables from the treasury. We're not using
exactly. So you're not putting imp in theirs, but you're giving them obviously DAI or MIM or whatever, because you can't invest into products with imp, right? You need to sell imp.
Yeah,
it's dilution, though, no matter how you look at it.
No, because it's not dilution, because we're buying a new tokens with stables, and
buying
we're putting
your
it
own
in our treasury. No, it's the second token. It's not our own because it will
Yeah.
be another token.
In
Let's
order
say
to-
we'll have
in-
options. So let's say we have options, a token named options. We will buy options with 100k. We'll put it in our treasury, and the 100k will go to the treasury of options, and it will do trading, options trading, and then we will have a share of the profits because we hold their tokens in our treasury. That's another
So
token. We won't be
purchasing
using
from
ImpDAO.
So I think it's easiest to think about it if we approach it from the case that this option pod is a completely unaffiliated protocol, which we as ImpDAO see in the market, right? We like, and then we decide with the treasury, with the fund, to invest 100k at backing value.
USD.
Yeah, exactly. With right, because in our treasury, most of the stuff is not imp, right? It's MIM, it's Scream, it's SPA, it's all different tokens, right? It's our fund composition, and with the stables there, we could decide to invest into a new project, right? This option pot, and get option imp in exchange as an asset, which is directly tied to the money we put in because it's trading at backing as they just raising funds.
Okay.
That's
I
how
understand.
I think. Okay.
I understand it in that sense. That makes more sense. But to me, I think you're missing an opportunity to really create a sustainable loop here, and by burning imp and giving people option tokens and utilizing the treasury liquidity instead of a fresh liquidity pool.
Maybe we're talking beside each other. Maybe it makes sense for you to elaborate your idea a bit around how the specific process would work, because I'm a bit confused how they then would also receive the funds and so on in your idea.
I think I'm missing something, but at the same time, I feel like it definitely may be more challenging. Don't get me wrong, but there's something there. I think with sustainability by burning the token, receiving an equal USD value of the option, because that's how they can diversify their exposure to the treasury. That's like taking your imp tokens off the market and you're getting value of options instead.
But that doesn't change a lot, because if you burn imp, the treasury value stays the same. So imp value goes up, but it doesn't matter. It doesn't create value.
But the
I think it's
exposure
actually
to the
the same.
options changes. This is a more true execution of what you guys are talking about logic-wise.
It's actually the same,
yeah,
right?
but it's more complicated to burn tokens. Let's
Yeah.
pay directly with the stable. So why do we put complexity if it's the same? Let's put the more simple way so people understand it. And I don't want to put too much burn mechanics, etc. Because our sustainability comes from us generating profit with the money. So it's not from burning, etc. It doesn't change anything if we burn. If you don't burn, we prefer to keep it really simple and just whoever wants exposure to our option strategies can buy to some extent, and we may have some new shit coming there, and we can't release too much alpha because it's we're working on it, but the overall fund structure we have right now is suboptimal to some extent, and we try to improve it before releasing another fund, so we're working on that. But for us, it's simple. We release a fund. If anyone want to invest in it, he can to some extent, and then we will invest the money. And we will, if no one does, we will seed it with the money and do our option strategies there to kind of isolate our different strategies, and at the end be someone wants to have exposure to 25% degen, 20%, etc. He can choose his own weights of the sub funds, and it will be totally independent from the main fund, but managed at the beginning with the same team more or less, and then it could spin off in completely different protocols with the decentralization, and just create financial products and put people in charge. Either we help them be in charge, or we attract experts and they take naturally over the protocol, etc.
I see it. I mean, I like I said, it can go either way, and I was just thinking, if you were trying to create an all-inclusive ecosystem with imp token, it may be pretty cool to incorporate something like that. I was really asking how you were going to execute it and sharing that idea. That's all. So that's cool. So new liquidity pool, you guys are going to do a public raise as well, or are you just going to seed it from the treasury?
No, I think doing a public raise as well is a good opportunity for people who like as Bossum said, who want to have more option exposure, for example, to directly sort of gain this through the public sale, right? And
so, the only concern for me is you guys are going to have people selling IMP tokens. But I mean, giving you more reason to sell, and you're creating more sell pressure.
It's okay. It's not. It's we don't care about the IMP price because all we care about is the treasury. The IMP price can go to zero. What we have in the treasury, what we invest in the treasury, is what matters because that's the true value there.
Zero, honestly.
No, but I mean, I think
that doesn't matter in the short term. In the short term, our focus
buying the token.
Yeah, but it's like our people and how we communicate. We will obviously control the price. We don't make it go to zero, but the focus is treasury and our focus is long term. We create value for our holders, and when they enter, we tell them that we are an advanced protocol. We plan to invest the treasury, and focusing on the price is focusing on the short term. Good companies don't focus on the price; they focus on the product. They deliver value to their users, to their holders, to their shareholders.
If everybody gets wrecked on the way to the product, then nobody has money to buy the product.
That's true.
Okay, we will buy it.
To sort of finding an equilibrium there, right? And I think for us, compared to most other protocols in crypto, we tend to focus more on the backing value, on sort of increasing returns on the treasury than on the short-term price, because similar to publicly traded companies, we feel like we can buy back the price if we want to. Obviously, the price still signals market sentiment, and I think that's an important point you've made, which is definitely also something we are actively watching. But it's not something that we are basing our strategy purely around increasing price, because from our perspective, it doesn't make sense for a fund to think about how they could increase the price they are trading at the exchange right now, but rather to think about how they can grow the fund in terms of net asset value and around asset under management, so that everybody who has a share of them has more money in the fund in comparison, right?
Right. I'm just keeping it real. Like if you guys are not worried about if you guys are not worried about price and you're only focused on treasury, I'm not buying your token and I'm not telling anybody to buy it.
No, I think
the truth.
Exactly, and I think
that's a good way to think about it. We invest money, like the price is just reflection of what we have in the treasury. So if you focus on the treasury, the price will go up, and we will earn. That's how we made our performance, and how we will be soon up, like 8% on 2 months.
Investors, and it just sounds like you're going to go down the same path of every other ohm fork, and your token is going to go to zero.
I think that the difference.
We will see. The future will tell. Like we won't.
I don't want it to, bro. No, I don't want it to. Don't get me wrong. I'm just saying, like what you're explaining is that you're not concerned about it, so you're not creating strategies to prevent it.
I think
we are creating strategies to make money and to up the price, but not to control the price, because controlling the price is a false problem.
It's not about controlling price, though. It's about trying to attempt to reduce dilution, and create mechanisms that can help sustain price, that could help mitigate the losses for people.
Our dilution is like 50% a year. So if we earn more than 50%, our price would go up. And we are on track to earn 80% like in 2 months.
Your yields are not comparable to most ohm forks, and it's a good thing. But I'm not talking about, necessarily the over dilution issue, because it doesn't seem like that's an issue. Like your chart doesn't look too bad. Like as far as, most ohm forks, you guys are sitting pretty, the dilution has slowed here, or not dilution, but the price
depreciation.
Yeah, exactly. Mm-hmm. You may be looking to be finding a support pretty soon, is what I'm getting at.
I think we in general we are thinking about the same thing. I think the point we just want to make is that the innovation and sort of the thoughts we put into the project are not primarily anchored around pushing the price short term, but around building a sustainable product, right? And in our mind, building a sustainable and a long-lasting product which brings innovation and brings an opportunity for investors to gain exposure in a set it and forget it manner to DeFi, right, is incredibly valuable. And in the long run, the price will reflect this. Obviously, there's a point to make around sort of also looking at the chart from time to time, as we also see, for example, with public companies, right? I mean, CEOs get ousted if the share price decreases materially over a couple years or over a couple months because people get angry holding the token. And I think that's also definitely something, as you said, to be mindful about. But our approach and our solution to fix it is to not stick sort of short-term band-aids around this in the form of sort of quick pump and dumps, but to rather continue to innovate and to work on bringing the product and the story we are pitching to investors and
hang on,
also where they should invest, right?
Yeah, but I'm not talking about a pump and dump.
No, but I mean,
I'm just talking about, creating strategies and valuable partnerships and farms to get people to, stake or farm tokens and help you build your liquidity and do things that will take tokens. But then maybe
let us take these 2 points, right? For example, you said farming and liquidity. So for farming, as Bossum already said, it's a double-edged sword in the sense that you also don't want to create too much inflation in your protocol because otherwise then
not your own tokens, not emitting your own tokens, partner farms. You build valuable partnerships, acquire protocol liquidity for gauge votes like you guys started doing over at Beats, Yeah. That was the other point.
Yeah, that's the other point I want to make, and I think I've published a couple of thoughts around this on my Twitter because the problem we see with liquidity, for example, for us, IMP is not a trading token in the sense that you need 500k liquidity all of the time because we are investing the funds actively, so people don't need to scale in and out of IMP at that quickly amount of time, right? So given how low yielding IMP is inherently, it's quite important that we are thinking about when we want to have deep liquidity as a fund, right? To raise new funds, to give people the opportunity to entry and exit IMP at their liking, but also when we don't want to have deep liquidity and just want to offer OTC, which we're already doing at market price to avoid slippage for large investors, because having deep liquidity is such a bad asset. I mean, it's returning so little for the treasury that it doesn't make any economic sense to have a third of the fund in IMP LP because you're generating maybe 10% or 20% a year on this, right?
I wasn't suggesting that you add liquidity. I was suggesting that you create value for your users to add some liquidity to earn tokens from partner farms. So you give them profit paths by not selling.
Sort of what it comes down to in the end, also if we look at sort of, for example, the bribe wars which have been going on in Fantom, fortunately, right? And they are good fun and they are a good opportunity to outsource this liquidity, for example. But it comes back to the point that you as a treasury need to pay bribes, for example, to attract and to get the emission on your pool, for example, which then again is also then a ROI question, right? How much money are you really making by putting out 100k in bribes? And for us, we looked at this and quite deeply actually, and it doesn't make sense to play bribes every time because the mercenary liquidity and the farmers sort of aping your pool then push up your price initially. You're completely right, and we've seen this, I think, in the chart when we did the bribes. But on the other hand, you also have a continuous outflow of bribes from your treasury, and it just is a matter of fact of whether or not you're able to raise enough funds in the same time.
It's a game. I get it.
And it's a zero-sum game.
That's not sustainable over time unless you're just super big and like Ring was able to do it very well. And anyway, I understand that, and
it's a good debate, actually. Yeah,
those things though. That's all I was saying. It could be anything.
It's a good debate. Yeah. And I think you definitely have a point to make.
There's so many farms on Fantom, bro.
Yeah, and to the point that it's also hard to distinguish, right? And that's also something we don't want to swim with the rest of the fish because for us we're building something different. We're not building the next sort of shitcoin farm to an extent where it's just an ongoing Ponzi and you're just sort of pushing funds from one side to the other. Because in the end, as I said, what it comes down to mostly is that most of these protocol strategies are just a way to raise funds, and you need to do something with your funds, and it's not just shifting them from one farm to the other, but you need to be able to invest in things which appreciate in value and avoid things that don't, right? It's quite simple in the end when you try to look at it this way, I think.
Yeah, I mean, okay, if you're looking at it from a business standpoint, Howard's right. The key performance indicator for IMP is the treasury value. I understand that. But at the same time, I'm looking at this from all angles. You have to look at it from the eyes of the person who bought at 100.
Yeah. Definitely.
How is that guy feeling? And how is the guy who buys at 50? And then, these people who are holding right now and supporting you, what happens when the token's at 10? Are they still supporting you? Or are they going to sell everything and be like, fuck this? I think it sucks because you spend this time community building, and half of these people are could get burned and then end up selling, and then you're going to be then just looking to new people, the new money to come in and buy the bottom and take part in the ecosystem. And maybe that's just the cycle of things. But at that point, you're just using your early users for liquidity, and I don't like that. But that's just me.
No, I agree. I think it's an important point, and I think in terms of asking people how they feel when they bought at 100, I think Bossim is a good example, who I think bought $150K at around 100 or 120 or something around launch. I'm not sure if I remember correctly, but I think that it was sort of around this price.
No, way less.
Yeah,
around 50K at launch, but we own most of the fund anyway. I'm not concerned about users just going out because they feel about the backing, and we will buy back if our price is way below backing. But
I think
focusing only on the treasury, that's all that matters. The treasury. If people want to exit, we won't prevent them from exit. We will try to reassure them and to educate them. But focusing on short-term price is counterproductive for long-term, basically. And if they don't want to listen, if they want to leave, it's their choice at the end. So
I think it comes down to the fact that not every protocol is best suited for every type of investor, right? I mean, if you're looking at sort of short swings, then maybe something with deeper liquidity, with more sort of price volatility is more your style in the end. And if you're more somebody who wants to have a platform to park some funds and to be able to watch these accumulate, then we might be another good choice, right? And it comes down to sort of time horizon for your investment, and also the expected volatility you expect from your investment. And you're obviously right. I mean, some people, as with every launch, got wrecked to an extent that they bought a bit too high. But I think it's tough to try to assure the people who bought at 150, right, who bought essentially into a protocol which was trading at that time 3 times above backing. It's the same as if you would buy TulipDAO, I think, is also trading at 3 times backing at the moment. You're just asking to get wrecked, right? And that's also why we have also tried to make ImpDAO as a community focused around educating people around these topics, because sort of buying into protocols way above backing is one of the easiest ways to get wrecked in the industry. And that's something which we are trying to actively sort of push into people's minds, and also to try to emphasize for people, because every fork, every treasury, right? So every node project as well out there should trade at treasury value plus the implied future expectation the team managing that treasury can do, right? Not only on the product side in terms of technical innovation, but also on the investment side in the form of allocating towards specific opportunities. That's sort of how we approach price and how we look at this. So given that we are now trading very comfortable at our backing, we feel that the current price level is quite sustainable and quite a good reflection of our value at the moment.
How is your treasury value reflected in the price?
So at the moment, I think we're trading around a market cap of 500,000, if I'm not mistaken. I think our treasury value
460K.
And I think our treasury value on the website, I think it's somewhere around 470 or 420 or something.
411.
411, exactly. So there are, I think, 15K in stuff which doesn't show, unfortunately, through the DBank API. So that's how we construct the treasury dashboard. So I think Abachi we sold earlier, but Grail, for example, is still not tracked accurately on the DBank, and there are a couple other things. So we are, I think, at the moment of sort of
It's 25k about the value that is shown up. Approximately.
Yeah, exactly. So our value there is, I think, 435, and then there's the investment we talked quite a bit around in our Discord, right? Which is a protocol which we have invested a 5-figure sum in, which is currently conducting a vote which would yield us on this 5-figure sum 5 to 6x on our investment, which would put the treasury value, if you price this in,
around 600.
Around 600, exactly. So I think, given that we are trading at 500 right now, it's a good reflection on sort of how the treasury has fared and sort of what people price in at the moment. So we see that either there's a certain premium to the current treasury, speaking to our expertise and sort of track record, or that there is a specific discount to this new sort of investment we are currently realizing, where people are still not sure whether or not it will fully materialize. I think that's sort of a good way to look at the current price level.
Stonks, definitely not Stonks, said if the protocol focuses on supporting price, it isn't doing what it should do. Pursue good investments in order to increase backing. Okay. Why can't we do both? What's so hard about doing both?
I
don't understand.
Yeah, I think it's a good point. I think the idea is to have both folks happy, right? To have both sides have price go up, have backing go up, and that would be the ideal world. Unfortunately, I think, as you know, also from your own protocol launches and Bloom, right? I mean, volatility for a smaller project is sometimes quite strong, especially, for example, for us, it was during the bribes, mercenary liquidity entered our token at quite a large scale, and now they are looking, for example, to exit as they are not sort of long-term affiliated with the protocol.
Hang on real quick. I understand, but
yeah.
Howard keeps talking about buybacks, but you guys said it's very clearly you're not buying back unless you find it a good investment. When do you find
buybacks? We did buybacks like those last few days, because it's a good investment with the money coming. By paying back, we're making like almost 30% on IMP, since we sell it later or higher. It depends. Like, basically, how we think about buybacks is, are buybacks a good investment return wise? If I buy back to make 5%, if I can invest in an opportunity that on average will make me 20%, it's better to invest on the opportunity than to do the buyback. If the buyback, it depends on the horizon of the buyback, why you're doing the buyback, etc., etc. It's not always the best scenario, and we will go always for the best scenario. But right now, buyback is the best scenario. So we have been buying back a lot lately because whales are exiting, and we think it's good price to buy them. So we have been buying. But if we see in the market better opportunity, we'll go for those opportunities.
Right. Okay. I mean, if you guys are buying at these levels, that changes the entire conversation.
I think it's important. I mean, I can post them as well here, but we have all of our wallets, but we do sort of the active investing public as well. So I'm just going to go ahead and pop them into the AMA chat as well, and you can see there that we've been quite actively trading to capitalize on the mispricing we currently see at ImpDAO, and that's, I think, coming back to your point around supporting price. As a protocol, when you feel it's necessary or when you feel it's mispriced. And at the moment, given that, based on the calculation we just did, sort of around our backing value with the new trade coming in is above 60. So us trading below 50 we feel is a good opportunity for the treasury to buy back its tokens, similar to a public company which sees its shares trading down and below sort of intrinsic value.
Yeah, well, like I said, the conversation changes drastically if you guys are buying at these levels. Like,
Maybe it was just a misunderstanding earlier, but it was good discussion, honestly. I really enjoyed it.
Yeah, from what was said earlier, I have to be the antagonist. I apologize, guys. You gotta
love it, yeah.
And especially being an Ohm fork, I gotta dig in, and at the same time, it's all just to keep you on your toes and kind of make sure that you guys got your shit together, because I do this to everybody. You guys know.
Yeah, honestly, I appreciate this way more because it's a way more honest form of having an AMA, right? And because people in the audience, I mean, they don't know us, at least most of them, and it's good that you're also taking the opportunity to protect people in your community from getting wrecked on people who don't know what they're doing, which is to say what we are doing as well, right? Because in the end, I think both communities and both protocols and ideas float around because we feel that there's so much misconception and people sort of just taking opportunity and advantage of folks not understanding the space or misinterpreting sort of technicals and valuations and so on.
Yeah, no doubt. No doubt. Thank you for standing and clearing everything up, and you guys really have solid answers, and I think that you guys have something here, especially when you guys start diversifying through these other funds and you provide these other opportunities for people. You might see some interesting things happen. You My DeFi brain goes crazy thinking about these option tokens and what you could do at Beethoven, though.
Yeah, I mean, I'm really looking forward to an opportunity for like an options platform on FTM, because obviously, I mean, having launched on FTM, we did quite a lot of due diligence on which chain to launch on, and we chose FTM for a reason, because we feel, as probably you do as well, and as most people do here in the audience, is that FTM and the ecosystem is inherently a bit mispriced. And once this re-rating happens, we all will see sort of a nice influx of TVL, most likely, and hopefully an options platform as well, because I mean, this would be great to have options on Scream, on Boo, on Bloom down the road, right? I mean,
the blue chips.
Yeah, exactly.
That's in my development plans. Just so you guys know, in our ecosystem is going to be options and full ability to short and long, and hopefully up to 10x is what my goal is.
Yeah, no, I mean, that would be the wet dream, honestly. I think Boss Imp has also for his option pod to have this amount of tools, because unfortunately, even Dopex and the other sort of blue chip examples in the industry right now who are pushing innovation around decentralized option trading are still quite early, right? I mean, it's still an ecosystem which is expanding and developing, and to the points I've alluded to earlier, right, around volatility pricing, it's the same thing. It's still something we as an industry as a whole need to get right, and we are looking forward to sort of building and also to sort of investing and playing in this ecosystem and growing field.
Yeah, no doubt. Okay.
Good, man. Time flies here upstairs.
Yeah, I can't believe how much time has passed. All right. Well, let me see. I think
we saw a couple questions, right? Yeah.
I just wanted to share that I would love to see a Beethoven pool that contains all of your basket of investment options. Like you have the options fund, and then this fund, and then this fund, all in one basket at Beethoven would be fucking sick, dude.
Yeah, exactly. I think we also chose Beethoven for a reason, right? Because for us, looking at the yield on our liquidity, the option to have MIM, to have DAI, to have Fantom in there, and to therefore also attract a bit of sort of third-party trading into the pool was a great opportunity for us. And I think the other great opportunity, as you've said, is down the road when you have multiple IMP tokens in the ecosystem, you have liquidity at one place, which gives you the opportunity for people to scale in and out of a specific strategy quite easily and sort of without any friction, right? That's our idea as well. So great for bringing it up, actually.
Yeah, man, awesome, cool. Well,
nice.
Right. Okay. Oh, real quick, Snoop had a question. How do you decide on your holdings, like
Yep.
Spartacus? Who decided on that?
Yeah.
Specifically, apparently, he's concerned.
I think honestly, Spartacus is I think one of the best investments we've made so far. But just how we look at it, so both Bosimp and I, we originally grew up after we sort of dabbled around on the Binance Smart Chain. We played heavily in the OHM meta, and for us, we saw the space playing out as exactly how I described it earlier, right? That a lot of protocols will face issues around deploying their treasury effectively. And I think Spartacus, for example, is a great one because you have two effects which will make the price trend downwards until there's a redemption, right? That one effect is that people like still leverage to the max on their 6+6 or what is it 9 platform, the Sparta Kadabra. And then the other effect is that their core team is quite small, right? So they can't really attend to the community really, and there have been some friction in the past around sort of questionable decisions. But for us, sort of looking at the protocol and at the owners, we have been confident that it wasn't something where people would rug suddenly, right? So we have always been confident in playing the case that there will be a redemption, which I think there now is a vote up for it. What a coincidence. And I think that has sort of been our thesis for this. But overall, I would describe our investment process as strategic and opportunistically. So we track a lot of different tokens in the Arbitrum, in the Fantom, in the Avalanche, and in a couple other chains where we feel like we have a good understanding on what the fundamental and intrinsic value is. And whenever we see these protocols trading at the intrinsic value, or whenever we see news which might change the intrinsic value, we tend to accumulate or sell, right? That's sort of our idea. And then I see a follow-up question around what does redemption mean. So redemption is when you as a protocol owner decide to hand back what's in the treasury to token holders. So it's like a reverse investment. And interestingly, I mean, you can also soft redeemed from Olympus at the moment, right? They offer this inverse bonding, which is essentially just you taking the money out of the treasury again, which also shows that people have a problem on protocol level to deploy funds effectively. And that's sort of what this is about. Hope that sort of answered the questions. Otherwise, please bug me again in the question chat. I'm looking at it now, so happy to follow up.
But to add something on Spartacus, like his thesis was we go back to backing. At one point, there is a redemption. And what makes the deal even better is you can take leverage and magnify that return. So on a risk reward side, we are seeing at times 5, times 6, times 7 your investment and only losing one
time.
Only the risk is only losing your investment. And if you are correct only 50% of the time, on average, you make 3.5x. So it's not about the deal in itself. It's about taking always that type of deal, and in the end making money because you are more right than wrong on that type of deal, and because of the asymmetry of the returns. Basically, you don't need to win every time. Even if you win 1/3 of the time, you make money. And here I think we win like 70-80% of the time. That's why it's interesting to take the best risk reward and not to see the investment as an investment, but as the expected value of the investment and the probability of the investment being profitable.
Yeah, and I think it comes down to why we like options as well, right? I mean, this expected value, which you have just described, it's in the end the opportunity to be able to lose 5 times, but if you make a 20x on your investment, I mean, you can lose a lot of times and be wrong a lot of times if you have deep enough pockets to still be profitable in the long run. And that's why it pays to put your money in a fund which can take these more asymmetric risk reward opportunities longer and avoid sort of getting wrecked, right?
Yeah, no doubt. Yeah, I'm sure, Snoop, that they're managing things fairly similarly to the way we do things, you know.
Yeah, so I think shorting at the
Exiting
moment,
gently over time.
exactly. I mean, shorting at the moment, as you said, Snoop, it's a bit difficult, right? Because we don't want to deal with centralized exchanges because for us they pose an inherent custody risk. So shorting the market is quite expensive, right? If you buy puts, you're already sort of getting it priced in that the market tends to go up. So whenever somebody on the other side has to take the bet with you that you want to sort of short the market, it's going to be expensive. So it doesn't always pay. So for us, what we have identified on a portfolio level, the most efficient hedge against these events is actually just having a bit of cash. And that's also something where we feel that spending more time around the efficient portfolio theory is that you can actually reduce this cash hedge, right? Because you reduce volatility on your fund, and then you can reduce the cash position and buffer your hold in terms of being able to capitalize on market downturns. But that's sort of just a quick explainer. So if you want to deep dive into this, just sort of Google efficient market and efficient portfolio hypothesis to get sort of a more academic overview on this idea.
I you know, as long as I know that you guys are supporting around this level already, that it says a lot. So yeah, cool, man.
No, good stuff.
This is good discussion. It sharpens everybody's swords, you know.
Yeah, no, I agree. Let's wrap this up. It was great sort of coming here on stage, and Tulip, thanks again for sort of being accommodating around the schedule and everything, and looking forward to hearing your insights and grilling you, to be honest, in the ImpDAO community and getting you sort of introduced there as well. And yeah, man, good stuff today.
Yeah, man. I expect the same energy when I come over there. Let's go.
Man, no worries.
Good stuff. All right, guys. I appreciate you coming by. Thanks for hanging out. We're gonna do a little post game analysis and do a little panel up here. If anybody wants to jump up, just let me know. Thanks for coming by, guys.
See ya. Bye.
Thank you so much. Have a good one.